Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. A few weeks ago, I posted 3 charts that I said would get you through the bear market. Let's check in on those 3. Then let's see if I'm any more bullish on anything else. So the first one was the 2-year MA multiplier. And this green zone historically has been accumulation. Red has been DCA out territory. Currently, we're in the green, which tells me if I trust this indicator, I should be DCAing, I should be accumulating. I don't think that's a bad strategy. Now, it may take you 1 year, 2 years in order to see the returns that you want, considering halvings in 2024. And I'll dive deeper in that side of things. But what you don't want to do is look at a chart like this 5 years from now and say, wow, that was a great time to accumulate. The entire world was on fire. Everything was bearish. I knew things were probably getting worse. I couldn't time the bottom exactly, but it didn't matter because if I was paying attention to this chart, all would have been okay, right? This doesn't tell you the exact bottom. It doesn't tell you that it's going to be the bottom. It tells you historically bottoms have been in this territory. So I like this chart for that reason. I jokingly also posted this chart, which is the rainbow chart. Call it a logarithmic regression, whatever you want to call it a joke, a meme, I don't care. It has been vaguely true. I'll look at a better version of this in a second, but it has worked out, right? There has been a little bit maybe of a self-fulfilling prophecy here, but in any case, we are currently in the basically a fire sale zone in that blue area with a risk to just fall out of this thing completely. The second thing you'll notice on this chart is the importance of halving relative to these cycles. It's no secret that halving is incredibly important to these bull runs, or at least it has been. And you can see how far away the current halving is. We can look at that in a slightly different way. If we look at the heat map, essentially, relative to days into the next halving, not stock to flow, you can ignore that completely. But this heat map is key and critical, sort of giving you a heads up, right? If you want to maybe time things a little closer to the halving, or time things relative to the halving, is that this chart would also suggest you have time. You have time to make decisions. You have all the time in the world. The market wants you to flinch. It wants you to make quick decisions. Don't do that. Don't listen to the market. Okay, take your time. Look at the data. Look at the evidence. This, amongst everything else I'm going to show, says you've got plenty of time. Okay, MVRV is another trusty chart that's been around for a while. Even before cost basis was analyzed or became a thing, we can see how this worked out in 2015. So this is market cap relative to cost basis of all the coins that have moved on chain on average. When market cap is below cost basis, as it is now, for an extended period of time, that's when bottoms have formed. So it may take 3 months, 6 months, a year, right? I don't know. But should the past help you predict the future, which is dangerous to say, then MVRV is lighting up, telling you DCA is a great idea here, right? Now, if we look at the trend metrics across the board, weekly and the daily, there is no hope, no help for you on the bull side of things because we're below the 20-week moving average, which historically has been exceptionally clean at giving you a heads up as far as upside versus downside continuation. Very much below the 20 currently, right? We would basically need to get back above 22 to break that. Weekly cloud, very reminiscent of 2015 cycle, 2018 cycle, right? We are just crushing it below the cloud, below the Tenkin. I wouldn't expect anything out of this market as far as upside at this point until we are back above the Tenkin, at the very least, much like the 20. Okay, so that's 2 checkpoints on your list for trend metrics. 20-week moving average, okay, write that down. Tenkin weekly, write that down. Okay, they're similar, the levels are similar. But again, historically, we haven't done anything worthwhile until we're at least flirting with a cross above the 20, the Tenkin relative to price, right? We don't actually take off until a bullish TK cross, realistically. But you can see we're so far away from that at this point. We got time, plenty of time. We can also look at the alligator fractal on the weekly. Been bearish since the failed breakout. This is the 5813 MA. Fractals give you stop losses for short or long, and entries for short or long. So if we're below these MAs, a short continuation is expected, and a breach below this fractal would give you an entry. Let's look how the previous entry points played out, right? Here's an entry, here's an entry, and this would be the next entry as far as for continuation to the downside. Stop loss at 24, whatever that is here. Previous stop loss here, previous stop loss here. So this has also been pretty decent on the weekly, right? You can see how this has looked when we're really juicing to the upside. Just crush these MAs as support and continue to just bounce, 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 bounce. So that's what you want to see, right? If we're bullish, again, pretty obvious, we're not bullish, right? Here's a different version of that rainbow chart. Logarithmic regression, power law corridor, line of best fit based on the previous 3 all-time highs. And we're currently in the zone of potential bottoming territory. Again, these are the halvings. You can see how we've looked pre and post halving, right? Plenty of time. We've got plenty of time. Plenty of time, right? It may be another 500 days, right? We may just bottom out here for 500 days between, I don't know, 10 and 20K, whatever that is, 12 and 20K. Yeah, just do a whole bunch of nothing for a long time. But that's what you kind of need to form a base. You need that accumulation zone. We can also measure it from a drawdown perspective as percentage drawdown, previous drawdown duration, as well as duration it took to reach all-time high again. And I don't want prices to go this low, clearly, right? But if we are measuring out the decision tree, trying to figure out where we think things may go on the crystal ball, 80% down would be around 13.4, 85 from all-time high would be around 10.2. So we're not quite there yet historically based on previous 2 all-time highs. Now we don't have a lot of data, right? We don't have 40 years of data. We have 10 years of data in 2 cycles effectively, right? Anything prior to 2013 is just sort of ancient history at this point from a market's perspective. So this is all we got, right? So duration wise, we're almost there. Percentage wise, not quite there. Now, do we need to go that low? No, we don't, right? But I think people are going to start to look at stuff like this and say, oh, we're not there yet. They're going to say, oh, we're at 79%. I want 85, right? And they'll start bidding that, or they'll bid slightly higher, whatever it is, because that's effectively what's happened in the previous 2 cycles. Self-fulfilling prophecy, certainly. Okay, that's definitely a big part of this. And you'll also notice that days to all-time high, depending on how you want to count this in any way, okay, the current all-time high or the previous all-time high, it's likely going to be after the halving. And much like ETH has undergone a supply reduction since moving to proof of stake, these things take time to kick in. So it doesn't surprise me that ETH is doing a bunch of nothing immediately following proof of stake, right? People may or may not remember this, but immediately after the previous halving in 2016, we had the Bitfinex hack. I think that was August 2016, right? That's this here, which they're still dealing with today. But something to watch for on ETH is, when do things start creeping up? When does that supply and issuance reduction, that emissions reduction, whatever you want to think of it as, inflation reduction, when does that start to kick in, right? Regardless of sentiment right now, that's a massive change from what it was to what it is now. The trader in me is very interested in that, right? I don't think ETH is the brightest and best crypto among us, but it's very tradable from that perspective. In the previous 2 bottoms, took at least 125 days, right? Now, it's hard to even know if this is going to be a bottom. I think it's even too early to measure it. So it's going to take some time, and we got plenty of that. On the daily time frame, downward pitchfork, bearish pitchfork. We're still stuck in that. This is a very aggressive, by the way. Pitchfork, historically, as a pitchfork aficionado, as a card-carrying pitchforkian, you don't see many that are this aggressive and lasting like this on the time frames like this, okay? But nevertheless, bearish, right? We're bearish until we're out of this. Bearish until we're back above the 200, back above the 200 on the daily as well as the weekly, right? And 10 to 12 to 14, whatever it is, certainly reasonable within the cards according to the current trend channel. Trend is your friend until the end, and doesn't look like we're quite to the end yet. Now, we could see a W double bottom here, but I'm going to start to look for that when we're back above 24, not hope for it when we're at 18, right? Because when I look at this, I'm thinking it is very possible that we just break down from here, right? Now, this isn't necessarily any chart pattern. Maybe it's some scallop thing. I don't know. Nothing that anybody would necessarily recognize, I don't think. Not really head and shoulders. Volume's kind of creeping up a little bit. But again, if you just measure this plainly based on fibs, 12.5 to 15, reasonable, right? Again, I don't want it to go that low, but that's a reasonable level. And Daily Cloud is also telling you this is bearish. Bearish TK cross, failed edge to edge, second in a row. Very rare. You even see the opportunity for an edge to edge. These happen once a quarter, if that. And even rarer that you get a failure. And even rarer still that you get failures back to back. Okay, that just shows you how bearish we are. So again, until we're back above the cloud, what else is there to do here? Really? You DCA, if you want to catch a knife, catch a knife. If you want to be a hero, try to be a hero. But I wouldn't expect anything super soon from this market, as everything just looks leaning bearish, right? And that's because if I'm in a range and I'm pushing lows, I can't be bullish, right? I can't just expect to suddenly magically pop up back to range highs, right? That may change a week from now when we're back at range highs, but we're not at range highs right now, are we? Daily alligator fractal also telling you, there's nothing bullish here. And then if you just look at the simple 1050 cross on BTC daily, again, you can see bearish, and you can see the previous two reversal attempts here that got swatted down. So look, we could see a falling wedge form out of this. We could see the parabolic, puke that we kind of have seen before, May, June, July. I think it's too early to call this anything personally, but tell me if I'm wrong in the comments. And ETH, very much the same. Obviously, aside from undergoing its supply reduction, just is unable to get out of this downward trend. And the fact that it got denied twice at this level is just kind of funny. But, you pick 3 points, you don't move this around. It's not really subjective beyond picking 3 extremes. That's just the way it is. And so far it's played out. So until it's out of this, it's hard to be bullish. And yes, ETH could easily retest 1,000 based on this. If BTC breaks down, I would think that ETH also would retest 3 digits at that point, right? And ETH daily cloud also falling out of the cloud with a bearish TK cross. If anything, this could be setting up for a bear flag, right? Just a vanilla bearish continuation here. But there certainly isn't just this magical expectation that things are going to go up again until we're above the basic checkpoints, right? 20 weekly, Tenkin weekly, cloud daily, 200 daily, right? Just simple. Just check it once a day or put an alert and forget about it and DCA and go on with your life, right? Because there's just bearishness as far as the eye can see right now, not even counting crypto. The world is falling apart, my friends. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.